The crypto markets peaked in 2021, and since then we have been in a bear market. Now, this isn't isolated to just the crypto markets. The entire global markets have also been in a bear market, as you can see with the US stock markets. Even though Bitcoin and other cryptocurrencies are down significantly, other stocks are down a lot too. Now, this video isn't going to tell you when the crypto markets will turn bullish or if they will continue to be bearish, but you are going to get a lot of information that might help you make some conclusions. You'll also learn about 3 new coins that have just been listed by Kucoin, and those are Moonwell, a lending and borrowing protocol on Moonbeam; Inflation Hedging Coin, a project meant to hedge against US inflation; and Forta. The DeFi world suffers from a lot of hacks and malicious actors out there, so we need someone to protect people against that, and that's what Forta is doing. Before we get started, this video is not financial advice. Please do your own research before making an investment. This is not an endorsement of any of these coins. This is just an educational video for you to learn more about projects that are available on Kucoin. And when you are ready to get started trading, there will be a referral link in the description for 20% off those trading fees. Now let's get started with learning what is going on with these crypto markets. Had to change seats, and let's talk about what's going on in the crypto markets. Because it's not just the crypto market that has been in a bear market, the global stock markets have been feeling the pain too. Big stocks like Netflix also have seen the pain from November highs of $700 per share all the way down to $162 per share. That's about a 77% drop since its all-time high. And at the moment, we are kind of in uncharted territory. Bitcoin was created in 2009 after the 2008 global recession. Bitcoin was meant to be a hedge against inflation. And you know what? It worked. The value of Bitcoin went way up since then, but that wasn't an easy journey. There were several bull markets and bear markets along the way, as well as a few crypto winters. So let's take a look at some data. Switching over to my computer, we can take a look at the bear market data, and here it is. So from January 11, 2012 to several months later, about 6 months, we saw a 40% decline. The next bear market had a 37% decline, the next one 83%, the next one 65%, and the current one 74% from all-time high to yearly low. And you can see the duration of each bear market does vary. It can be anywhere from several months to almost a year and a half. So the reason why this current bear market looks different is that we could be on the brink of another US recession, which will impact global markets. But at the same time, awareness and positive support of crypto has never been higher. Previous bear markets feared China banning crypto and intense regulation in the US, but some of that has already happened. So now we're at the point of where more companies are integrating blockchain technology, and at the point where anyone can set up a crypto wallet and be part of the global decentralized finance movement. By the way, there's also a cool video on DeFi 2.0 on Kucoin, and there will be a link in the description if you haven't seen that yet. But I'm sure you really just want to know, up or down? Is the crypto market going up or down? Because you don't want to invest now if you can get in at a lower price. Personally, I am very optimistic, but I'm always a perma-bull when it comes to these things, and that's not financial advice. I've just seen what the traditional finance markets look like, and the crypto ones look better. But let me know in the comments what you think. More bear market, or is it time for a bull market? Now let's take a look at the new token listings on Kucoin. Number 1, Forta, coin name Fort. Forta was created to add security to the blockchain world. It operates as a decentralized monitoring network capable of detecting risks and errors on Web3 systems as they happen in real time. And to better understand how Forta works, we have to look at an example. And let's say there is an exploit on a bridge, and that's between 2 different blockchains. If Forta detects that a lot of money is leaving one side of the bridge and money isn't coming in on the other side, they are going to alert the subscribers. So then these protocols protocols that are running the bridge can stop the bleeding. They can find out what's going on, and that's what Forta is doing to stop and detect threats early. Now, other people that subscribe can also get these alerts so they can understand what exploits are out there and to prevent any vulnerabilities on their side as well. Here's how it works. To use Forta, you need to subscribe to their service. Anyone can subscribe, from holders, investors, protocols, or systems. So let's say you subscribed. What happens now? Well, the whole process works in 2 steps. The first step is that Forta uses dependent node operators and detection bots to scan the blockchain. You can think of these node operators as crypto security guards. They are looking for unusual transactions, potential threats, and all the block-to-block state changes. If things are running smoothly, then the crypto security guard is going to say, "All good here, Chief." By the way, fun fact, I had a part-time job as a security guard in college. I was not very good at it, and I am not very confrontational, so that did not work out well, but here we are. So let's say these crypto security guards find an issue. Forta notifies all subscribed parties of the details of their findings. That's when it's up to the subscriber to fix any possible risks, threats, and errors in order to prevent any potential losses. Forta is already being used by many projects to monitor their activities on various blockchains, including some big names like Lido, Compound, and Polygon. Now, all of this sounds very convenient and easy, and I know what you're thinking. If Forta is watching all of that, who is watching Forta? Well, to answer that, Forta itself is being regulated by immutable smart contracts, and any change to its function or utility is done through governance by token holders. So now let's take a look at the token. Fort is the native token of the Forta network, and besides using it for governance, you are also required to have it to access their monitoring services. So you need it to subscribe. And there are currently 5 threat detection kits available, each specifically tailored to monitoring different parts of the Web3 ecosystem to detect threats. There's the bridge threat, DeFi threat, governance threat, NFT threat detection kit, and stablecoin detection. You, as a DeFi user, might not personally need any of these, but the fact that Forta offers these services to developers is a good thing, since developers can use that data to create more secure platforms and apps, because one hack can potentially put a protocol out of business. So the real purpose of Forta is to defend the blockchain. If you see a big future in that, that's where the potential of the token comes in. And if that's been helpful, you can help this video out by considering liking the video and subscribing to the channel. Feel free to do that now. Number 2, Moonwell Artemis, coin name Well. Moonwell Artemis is an open lending and borrowing DeFi protocol built on Moonbeam, and Moonbeam is part of the Polkadot network. If you want to understand more of the Polkadot ecosystem, there will be a video link in the description that will help you out. Now, speaking of other projects that we've covered on the Kucoin channel before, Moonwell works similarly to Aave, which was covered in DeFi 2.0, in that users can lend assets to receive an APY, annual percentage yield, as well as borrow assets from the platform. That means you can deposit some of your crypto assets and earn interest, so you can get some of that crypto passive income. You get additional benefits to using Moonwell Artemis, such as lower fees, higher interest rates, faster transaction times, and security. Here's how it works. The protocol basically allows you to borrow and lend crypto assets just like other decentralized protocols, but with the added advantage of being EVM compatible. That means you can be in the Polkadot ecosystem while still using Ethereum-based dApps like MetaMask. The Moonwell Artemis community is security focused, and they have periodic audits by big firms and a bug bounty program, and in partnership with ImmuneFi to ensure maximum security, because they know that DeFi has risks and they want to limit their exposure to that. Now let's go over the token, coin name Well, which is also known as the Artemis token. It is the utility token of the Moonwell protocol. When you interact on the platform by either borrowing or lending, fees and rewards are paid out in Well, though you can also choose to get paid out in Glimmer, which is part of the Moonbeam network. And if you are a fan of the Polkadot ecosystem and think there is potential in what is being built on Moonwell, Go check them out. Number 3, Inflation Hedging Coin, coin name IHC. We all know that inflation is here, but what can we do about it? Well, Inflation Hedging Coin thinks they have the answer. As the name states, it's a coin that aims to solve the inflation problem. In simple terms, inflation is when a currency, such as the US dollar, loses its value. This is usually caused when the supply is increased, aka money printer go brrr. If you've been paying attention to what's been going on in the US economy, the US has been printing money at an alarming rate. In fact, about 80% of US dollars in existence were printed in the last 2 years. Let that sink in for a moment. They 5x'd the supply of US dollars. And even though inflation hurts the people of that country, that economy, the US dollar is so ingrained in global markets that it affects everybody globally. So instead of the value of the US dollar versus the Japanese yen or euro staying the same, the value of the US dollar went up while the value of those other currencies went down. And that means any travelers that want to come to the US and spend their money being a tourist there, it's going to be significantly more expensive. So back to Hedging Coin. Let's explain how it works. The main feature of IHC is buying back and burning its supply. This alone isn't too different from how other cryptocurrencies work, so what sets it apart is that they buy back and burn at the rate of the US annual inflation rate, making it deflationary. So let's say at the end of this year, the US inflation rate hits 10%. What IHC would do in this case is buy back and burn 10% of its token. By doing this, as long as the demand remains the same, the IHC tokens still in existence will have their value increased since the supply has gone down. The burning process will continue until its total market cap is equal to the number of token holders. Another way IHC is making itself deflationary is by making transaction rates nearly 5%. That's very high, which could make it more challenging to get this coin into the hands of more people to increase the trading volume. Because if you are holding IHC, you want to see trading volume because that's how holders benefit the most. And that brings us up to the token. The IHC token, this is what you need to hold in your own wallet so you can get those transaction fee rewards. Since those rewards are distributed to all token holders, the more tokens you hold, the more rewards you can get. Since Inflation Hedging Coin is a DeFi project, there are plenty of staking and yield farming opportunities available. Personally, I think this one has a lot of challenges compared to other crypto projects, but let me know what you think in the comments. And those were 3 new token listings available on Kucoin. Let us know what you think was the best, or if there are other tokens we should cover in the future. You can also help this video out by hitting the like button. Please consider subscribing, and if you want to get started trading on Kucoin, there will be a referral link in the description to get 20% off your trading fees. And with that, this has been a Kucoin video.